Good morning. Today it's April 5 and in the West Coast about 9:30 and in the East Coast it's about noon 30. We bring those presentations to give you an idea on how technical analysis work and how useful it can be for you to prepare investment strategies or trading strategies. They are not a recommendation to buy or sell anything. You need to do your homework and you need to know what you are doing before buying or investing in stocks, futures, options, all those investment instruments. And I would like to invite you also to stop by our website and check the training we offer for technical analysis. Well, let's now review the market. In the last few days, the market has been basically consolidating in that level. It broke above resistance, quite important resistances, and now it's consolidating. Today it's a little bit stronger than yesterday and Friday. And we have seen some very good movements in some issues, even though most of the stocks are stuck in a very narrow range. The S&P has been trading a little bit higher today, but not above the last 2 days high, and volume it's still quite slow at that time. We expect that we'll be trading above those levels here, the February high, in a few days or maybe next week at most. We should be trading above that level. And my expectation is that we'll reach the level of 1375. That probably will be a short-term top. When we move to the Dow Jones has been a little bit stronger than the S&P 500, and it's already moving higher and breaking above February resistance, February top. It's very, very good movement, so that demonstrates strength in the largest companies in US. And we should be trading to that level around 12,600 in the next few days. So quite a good upwards movement that I expect for the Dow Jones. There is no really, it's not yet a very good trend, but the trend it's improving. The Nasdaq, on the other hand, is a little bit weaker than the other US indices. It traded above that downward trend line after all the other ones had been trading above the trend line, and instead of consolidating the last few days, it has been trading lower, and today it's bouncing from a low, but it's still with very little volume. Next resistance for the Nasdaq is in the 2370 range, and it still needs to go quite a long way until it breaks February high that was in the 2390 range, so 2400 range. So let's see how Nasdaq behaves. And in terms of seasonal, the time it's not very good for the technical stocks. Semis are not very good lately. Let's see how it unfolds at least until the mid-year, until June, July. Oil and natural gas first. Natural gas has been trading higher, and lately it's retracing from highs and found some support around the 15-day moving average and the 20-day moving average. So now it has been consolidating at that level, and it might be trading higher from that point into the future. I expect that we'll reach the 200 period moving average on the natural gas maybe next month or so, or this month or next month the latest. Even though it's not a very good time of the year for natural gas, lately it has been showing some strength, but the buying force has been getting weaker and weaker in the last few days. So until we see some buying pressure and the price going up again, I don't see really a very good chance for a longer trade on natural gas. Oil, as represented by the United States Oil Funds, traded above February high, March high, and now it's also moving sideways on a small range. Today, those energy commodities are moving on a small range. My view is that we will continue to go higher in the oil. I don't see much selling pressure still in the oil, and the upwards trend is consolidating and should be moving higher in the short term. Looking at the Toronto Stock Exchange, today it's quite a good day for Canadian stocks, and mostly because of gold and silver stocks. Those two commodities are trading higher today, and gold has been quite strong today, and that's pushing the TSX index higher, and the Canadian index shows a lot of buying pressure lately. Should be breaking above March top, which is around 14,300 shortly, and in the next few days, maybe even before the end of the week, we will be trading above those levels in Toronto. Now, looking at gold first, gold has been very strong and breaking above a consolidation region, and that should push prices higher in the short term. So I'm watching gold to see how high it might go. And now let's take a look on how to make projections with, for example, using Fibonacci levels. One way that we can project price into the future is by checking how the Fibonacci projections from the last leg appear, and that assumes, right, that the following leg will be as strong as the former one, as strong as the previous one. So that's one assumption, and if that holds true, we will see gold prices as represented by the iShares Gold Funds, IAU, reaching levels as high as $14.80. So that's a chance. Let's see if it goes that high. However, there is a better chance to reach in the short term the level of $14.34. So those are the levels that this type of projection can predict, and it makes some assumptions, and one of the assumptions is that the next leg up will be as strong as the previous leg up. And it might work, it might not work. It has a good chance of working, but it might not work. Another way of predicting how prices might look into the future, it's by projecting the last leg up, doubling this short leg here up, and we reach to very close levels, very close to the levels I showed before. So both Fibonacci projections assume that one leg, the following leg, will be as strong as the previous one. And what is the previous leg is what makes a difference on how you analyze using Fibonacci projections. So that's a taste of what you can do with Fibonacci projections, and a lot of people use this to create strategies and to set targets into the future. Let's take a look now on how silver looks like as represented by the iShares Silver Trust, SLV. It broke above a consolidation level yesterday, and now it's trading higher. My expectation is that we are going to continue higher for a while in silver, and it might be a good trade. So keep in mind that I'm not making any trading recommendation. Every trade involves a lot of risk, and what I talk here it's just about a small fraction of what trading is. I'm talking about setups and targets, but not much about how to build the strategy. We cover that in our training courses, and we cover from the basics of technical analysis to how to set up a business of trading or investing. Even if you have another job, a day job for example, you can or you should approach trading as a business. It's not for fun, it's not gambling. The main idea is to make money in the market. So we need to approach that as a business, having a plan, having very good, well thought strategies. Otherwise, the risk of failure is huge. Even with all those tools available, the success is not 100% guarantee. You still need to do a lot of work, and how much time you have available to invest on preparation will affect the type of strategies or the type of trades you can do. How you can select or invest, it depends on how much time you have available. If you have very little time available, you need to look into longer term strategies, and we cover all that in details, in very good detail in our training courses. Well, I would like to thank you very much for watching, and again I would like to invite you to visit our website www.taacademy.com, or to follow us on Twitter. I do not tweet trading tips or hot stock of the day. This is useless in my opinion. And what I do, I tweet news that I find relevant. It's not like getting news to get everyone scared. It's news that are relevant and might have an impact on people's strategies. Well, again, thank you very much for watching, and see you soon.